Wealth tax is one of the most hated taxes of the Italian tax system. And wealth tax is payable on foreign held assets, which are bank account, partnerships, corporation shareholdings, investment portfolio, foreign private pensions, foreign real estate, yachts and other luxury items, gold reserves or other precious material reserves, artworks, etc., which are held abroad. Now, if you think that wealth tax is a tax on foreign held assets and that's it, well, you would suffer the same tax if you have the same assets in Italy. Think about real estate. You pay Italian property tax. But what happens if that real estate is held in the United States? Well, you are required to disclose it and pay property tax on the foreign items, and the rate is the same as if it was held in Italy. Now, what is very important to know is that you have two problems with wealth tax. The first one is to disclose the foreign held asset, and the second one is to pay any wealth tax on that. So if you have financial activities, well, the rate is 0.2% of the year-end value, which means if your investment portfolio is worth 1 million at December 31st, you're required to pay 2,000 euros. Now, is that good? Absolutely not. Is wealth tax a nice tax to pay? No tax is nice to pay. However, there are huge fines if you do not abide to that. It's not about the fine on the wealth tax, but it's a fine on not disclosing your foreign held asset item, which goes from 3% to 15% of the item per tax year. So if you do not disclose your $1 million investment fund and you got busted, the minimum fine you pay is 30,000 euros, up to 150,000 euros for every single tax year you do not disclose that. So it is very important to keep your wealth tax affairs in order. Or at least if you can't pay the wealth tax, at least disclose those items, because it's very likely you get caught. If you get caught, those items, they might disappear. If you get caught 6 years in a row, you might say goodbye to your foreign held assets. But now, which is the right value in which calculate on it? For investment assets, it's very easy. It's the market value. They're liquid. Or for money, it's very simple. It's money. If you have a bank account with 100,000 euros and it's held in Germany, the value is 100,000 euros. And by the way, you do not pay a 0.2% tax on bank account, but you pay a flat 34 euros, regardless of the amount you hold and store in that bank account. But a different system is for real estate, because real estate, they have a fluctuating value. So on which value do you actually calculate the foreign property tax? Well, first of all, the same value used for property tax purposes abroad must be used. So, if your property is worth 100,000 euros for property taxes in Spain, you should disclose the same value. Or if there's no property tax value, you use the cost value. And finally, if there's no cost available or the value at which you inherited your property, you use the market value. Now, the good news is that you can deduct any property tax paid abroad. And oftentimes, this foreign property tax covers any Italian property tax due. So, wealth tax is due only for Italian residents. So, if you are resident in Italy, regardless of your citizenship, you are required to disclose and pay wealth tax. And a good way to structure your portfolio efficiently is to use a società semplice, because the società semplice is required to disclose the value but not to pay any wealth tax on that.